With a host of Eurozone PMI data releases due out tomorrow morning, starting at 7 a.m. GMT, let's take a look at today's Eurozone consumer confidence release in a bit more detail. Well, joining me on the line is market analyst Gonzalo Canete of CMC Markets. Hi, Gonzalo. Now, we're expecting a long list of data relating to the euro area this week. We've got PMI releases relating to France, Germany and other economies in Europe. And then we've got the German IFO on Wednesday. Today we saw the consumer confidence release. What's your analysis of the figures and how do you see the markets reacting this week?
It was the worst rate that we get in the last 3 months. In June, it was 21.7. 21.6, sorry, and the last one it was 19.6. So I think it was worse than we expected to get in the consumer confidence rate. It was a bad rate. Also, if we are thinking how this kind of rate affected the market, I think we are watching this in the markets today because we have awakened this morning watching how the Spanish and Italian markets have broken the minimum level since 2009. So if we're talking about how this kind of rate European zone and the consumer confidence is affecting to this, I think it's in the same way, in the same road that the last rate that we get in Europe. So I think customer confidence, it was a worse rate from the last 2 months, and we could wait the next ratios from European zone not really good, unless the European Central Bank policy will change.
Now, there are reports the IMF has lost any patience it had with Greece and may now cease to provide any further financial assistance. How much of an impact could this have on market confidence?
Well, I think it's not just IMF. IMF are skeptical about the following next installment of the financial help, but also European Union are talking about if the next installment of financial help to Greece could help to the real problem that we get or not. So this position from IMF and from European Union in general, because the help of financial help comes from IMF and European Union to Greece. This position from both institutions, European Union and IMF, are creating this situation in the markets this week. So if we are talking about how could be the effects of this position, the skeptical position from these institutions, we are watching today in the markets because we are watching how the markets are falling down. The institution in Spain and Italy too, the CNN, the institution from authority of the markets in Spain and Italy not able to short position since today to the next three months.
Now, the euro has hit its lowest point against the yen in 2 years. This is a sure sign, is it not, that economies outside Europe are really losing respect for the way euro leaders are handling the crisis?
Well, I think it's not a good point from the Europe. Europe are showing that he is in this moment a weak currency in relation of yen and in relation of dollar. But if we see the charts of European against yen, we can see that euro is in the minimum from last years. So what can affect to the economy? I think it could be a problem from the Japanese economy too. And if we are talking in relation of the IMF news from IMF, and we are talking about in relation of the last ratios like consumer confidence, we can say that we are watching how the debts that we have in Europe and the situation in Europe are affecting to the principal economies like America, North America, and Japan's economy. What is the point now? Well, we get a weak currency, and we are watching how in my opinion, the policy of the central bank are not helping to recover the levels of the European currency. The euro are so close from the last minimums in the last 2 years, and we are watching how this currency are fall down every day, and probably it will continue if the policy of the central bank from Europe that don't change any other way to solutions to the problems from Greece and the problems of the Italian and Spain economy also.
Thanks, Gonzalo, for joining me today. That's all for now, but I'll be back with another interview tomorrow when we'll take a look at the latest Eurozone PMI releases. But until then, goodbye.